So, welcome to another live stream here on this channel. And yes, it's all red as you can see in my studio because it was a very bad day, guys. Let me know in the comments where you guys are watching from. And let's dive directly in. So, we are having the whole market taking a tank. Quite ridiculously, like S&P 500 minus 2.3%, Dow Jones 2.6%, Nasdaq 2.3%, Russell 3.7%, crude oil 13%. Yeah. And the list goes on and on. So this is quite a small shock. Virgin Galactic actually not that bad compared, to the other things like Tesla, for example. Bitcoin down 7%. So yeah, it's quite a ride, right? Quite a deep dive, and it's all because of the I cannot say the word because Facebook algorithm don't like that, but the C, right, has a new version, and everybody is scared what this does to the economy and so on and so forth. So this is the main reason why everything is tanking. Now, I personally believe that this is a temporary pain, and that this can actually be a great point to get in, to buy more, right? So buying the dip. And this is because if you're looking into the S&P 500 and what happened, for example, with the Delta version of C, which was approximately in August, which was here. Wait a second. Around here. And you can see that actually even in this August, we had a small dip here in the mid of August, but otherwise it was a pretty good month, right? So you can see here that it seems like, it's something that we have seen before. And guys, if you are enjoying Thanksgiving, obviously I have something for you, okay? With the link into the description, you can use the code THANKS50 and get 50% off only this weekend, the Thanksgiving weekend, Black Friday, on the lifetime Discord access. And what does it mean? You get Discord access if you are going to purchase this course. You get access to a great community here at Wolf of Dubai. We are talking about Virgin Galactic and other stocks every day with really cool people, hundreds of people. So if you're interested, check in the link below. And now I would like to dive into something, one of my favorite analysts are saying, and have a listen. Let's listen to this together to see what he's thinking about the current dive on the stock market.
For more on today's sell-off, let's bring in Tom Lee from Fundstrat Global Advisors. Tom, good to have you here. Obviously, you've made a real franchise of actually talking about the interplay of COVID and the markets and how you think it's best to play it, and trying to handicap whether the market has already priced in the latest or the coming news. How are you treating today's market reaction, and what do you think about whether we should be taking this new COVID potential threat seriously as an economic event?
Hi, Michael and Sarah. First of all, happy Thanksgiving, or happy post-Thanksgiving. I mean, it's, today's obviously a fierce reaction, and the markets are always going to be a little worried about things that change visibility and things that can cause policymakers to panic and then eventually consumers to panic. And today is a great example of that. The VIX has already risen 45%, and the 10-year has come down dramatically. So I would be in the camp that I think today is much closer to marking the actual tradable low. Our technical strategist, Mark Newton, has called for a 3 to 5% correction that was going to start and then end in early December. I would say this is the hallmarks of this is actually today. I mean, I'm not a scientist, but there has not been a variant of COVID that has actually truly changed the direction of the economy. So I know this is very alarming, but investors need to take it in stride too.
Yeah, well, there's certainly no doubt about that. I mean, obviously, even maybe in the best case scenario, we have a couple of weeks where we're not really sure how to assess, the science behind this new variant and things like that. But do you think the market is also essentially reacting to, where it had been already? In other words, this is certainly a very direct excuse and a reason to drive this one-day market action. But do you actually feel as if when you see crude oil crack below $70 a barrel, and you see a lot of these macro moves that seem as if they're kind of losing their previous trends or ranges, is that something that you feel as if can feed on itself?
Oh yeah, it's Michael. That's a great point. Once a sellout starts, nobody can really determine the depth and the fierceness and the speed. But today, the timing is awful. I mean, it's a shortened trading date in the U.S. with very few people actually at their desks. In Europe, it's a shorter session. I mean, if I was a policymaker and I was worried about oil prices and the SPR was kind of like a last bullet that didn't do much, this obviously helps make people panicked and it's causing oil to be lower. But do I think oil is $60 in 2022 because the economy has screeched to a halt because of this variant? I mean, it's possible, but what investors have to keep in mind is South Africa's vaccination rate's like 24%, and the number of cases reported is 2,400. So even though this new variant's a large share, it was the cases were over 30,000 in the summer. So it's look, policymakers are panicking, and generally when policymakers panic, that's when investors want to actually step in.
So just to be clear, you're saying buy the dip. What would you be buying?
Yes. I'd be, I mean, I don't want to sound like I hit the Jim Cramer button, but yes, I think we're still on track for a fierce December rally. I think it's going to be led by whatever is getting stop losses today. So, Art Cashin talked about this morning, the cyclicals, I mean, casinos and hotels selling off and retailers. I mean, these are companies that dramatically cut costs and they have huge demand, and investors, I mean, unless the entire world decides to buy bonds, stocks are still cheaper than bonds. You're paying over 50 times to buy a 10-year. You're paying, sorry, more than that, 65. You're paying 50 times to buy an investment grade bond. I mean, the S&P, at 20 times our 2022 estimate. I mean, it's still a bargain.
Yeah, as you can see, a couple of points. First, he says like the stock is still without any, let's say,
today, Art Cashin, UBS Director of Floor Operations, is joining us now on the CNBC News.
Without any competition, right? Stocks are still cheap compared to bonds. And I have seen now a couple of people on CNBC today, and most of them actually said it's time rather to buy than to panic. And I think I'm in the same camp, and that's why I believe that, you should really consider, I don't know if this was really the bottom. Could be not. We shall see. But Monday is definitely a bigger volume as well. Here you can see volume in the S&P 500 was an average $3 billion, but today was only $2 billion, so a third less volume as well. So it's really, yeah, as Tom said, like there's very, very low volume, and people are panicking quite easily, specifically at the tops, right? They are, I have to sell now my assets to save my profits a little bit. So but this can then bounce back obviously quite heavily on Monday, Tuesday, Wednesday, next week, next month, whatever it will be. I think this is not something that will be there for a long time. Just a small breath and a great opportunity to buy the dip for specifically for the long term. And before we send you to the weekend, I would like to also say hi to our members, the Tech Freaks from Berlin. Thank you very much. Gallardo Steve from Holland. Canada is also in the house. Our member Robert Howard is also joining here. And you guys are talking about the metaverse. I just finished a movie about the metaverse. I watched the USS Callister on a recommendation of a user of you guys. So if you have any metaverse series or metaverse movies that I should really have a look on, let me know. Send me a message. Follow me on Instagram, guys. There you can send me messages as well, or join our Discord. This would be highly appreciated. Down is the link for 50% off with thanks50 as the discount code. Have a great rest of the weekend, and I see you latest tomorrow with a daily vlog. So stay tuned, and thank you. Take care, and